Hi, welcome to this week's market update, where we simplify the latest news on interest rates, inflation, and housing trends. This is brought to you by our friends at Insight Photos, and here's what you need to know. If you missed our tax break secrets for real estate success, please let us know and we can send you the recording. Not only should it be valuable for you, it's something you can duplicate to help your clients as well and get more referrals. Now, this week, December's PCE inflation report came in exactly as expected, which was no surprise for mortgage rates. Inflation is still running a little higher than the Fed's target, but that's really mostly because of outdated shelter data. We've talked about that a little bit. Real-time rent numbers suggest inflation is much closer to the target than it appears. And consumer spending, something we've talked about a lot as well, does continue to outpace income growth. And with the savings rate dropping again, basically people are relying more on credit, which can't last forever. And eventually, slower spending should help ease inflation, and that'll bring mortgage rates down. Pending home sales did drop last month for the first time in 6 months, and that's reflective of higher interest rates that slowed activity, but demand is still strong compared to historical levels. Homeowners, though, are starting to struggle. We're seeing more delinquencies there, despite official unemployment rates remaining low, and some of this is probably tied to rising household debt. But as expected, the Fed kept rates steady this week. Powell confirmed they aren't in a rush to cut rates until they're sure inflation is under control. And President Trump is pressuring for the Fed to cut rates, which you might have seen online or in TV. But he doesn't really control interest rates directly, but his policies on things like tariffs, taxes, and spending could impact inflation and in turn the Fed's decisions. Next week, it's going to be jobs week. We're going to get key reports from ADP and the BLS. And if we see the labor market show signs of weakness, it could help rates improve. But if job growth remains strong, expect mortgage rates to stay higher for now. Basically, just to sum everything up, we are seeing inflation cool a little bit, but the Fed's playing it safe. Mortgage rates are still a little higher, but a weaker labor market and slowing spending should eventually bring them down. And next week's jobs data will be a big factor in shaping the market's outlook. Have a great weekend, and I'll see you next Friday.